Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us, ensure you like, comment, share, and subscribe. Thank you for clicking to this. Ensure you like, comment, and subscribe to this channel. Okay, now today we've seen an introduction video on revaluation account. Okay, I want to see a question. We have diverse questions regarding revaluation. Okay, so I indulge you watch to the end of this video. Don't miss any aspect. Okay, so we want to see this question showing on your screen. It said Taiwo and Kehinde are in partnership, sharing profits and losses equally. Their balance sheet as at 31st December 2007 is as follows. Taiwan Kehinde balance sheet as at 31st December 2007. We have capital Taiwan Kehinde 36,000 giving 72,000. We have current account Taiwan Kehinde 24 and 14 giving 38. We have current liability creditors 20,000, bills payable 7,000, accruals 840 giving 27,840. And on the right hand side we have fixed asset Goodwill 12,000, freehold property 20,000, motor vehicle 30,000, furniture and fitting 6,000, all sum up to 68,000. We have current assets stock, debtors, bank cash, all sum up to be 35,640, and everything sum up to be 103,640. Okay, now it said additional information. On 31st December 2007, Idowu was admitted into the partnership. Profit and losses would still be shared equally. Idowu introduced capital of 36,000. The following assets were revalued: Goodwill 18,000, freehold property 30,000, motor vehicles 50,000, stock 12,000. A provision of 5% is to be made on debtors. Goodwill is no longer to be retained in the books. You are required to prepare A. Revaluation account, B. Goodwill account, C. Partners capital account, and D. We have the partners current account. Okay, so these are the questions. This is a question we're asked to solve. Now let's get into that. But if you have not watched the introduction aspect of this video, I'll drop it in my description or I'll drop it up here so you watch and digest that. Okay, it is very important. Now, they said in this question we have the assets, the balance sheet that was given, and we also have what assets that was revalued. Okay, so in this now, to get a revaluation, the first thing, according to the accounts they're asking us to prepare, they said we should prepare the revaluation account. So if we prepare, what is the name of the owners? Taiwo and Kehinde. So have revaluation account. Revaluation account. Now, if you remember in our previous video, we said the credit side would be increase in the value of asset, while the debit side would be what? Decrease in the value of asset. Now, let's see the assets that was revalued. The first one was Goodwill. Okay, now we have the book value of the Goodwill as 12,000 and the revalued amount as what? 18,000. So it means Goodwill increased. So have here the Goodwill. It increased by how much? To 6,000. Okay, increased by 6,000 because the revalued amount is 18,000, while the book value is what? 12,000. So the next one, the next asset there is freehold property. Okay, the freehold property, the book value is 20,000, while the revalued amount is 30. So it increased. So we have freehold property as 10,000. Okay, freehold property as 10,000. So the next one, motor vehicles. The valued amount is 50,000, why the book value is 30,000. It means it increased from 30,000 to what? To 50,000. Okay, so we'll have motor vehicle as what? 20,000. Okay, the next one is stock, 12,000. Stock 12,000. The book value of stock is 12,880. Why the revalued amount is 12,000? That means it reduced, okay, from 12,880 to 12,000. So it will be here as stock 880. Okay, so another item in the additional information, they said a provision of 5% is to be made on debtors. Okay, is to be made on debtors. Now, debt provision of bad debt is meant to reduce the amount of our debtors. Okay, so if you check there, they gave us a provision as 5% on debtors. Debtors is 18,400. So if we do that, 5% provision. So if we do 5% times, what's the amount for debtors? 18,400. 18,400. We'll have 5% on 18,400 will give us 920. Okay, so that is a provision. So let's check if there's any other item. There is none. Okay, so that is that. So we are going to check if there is profit or loss. Okay, so in this now, it is obvious that there's the increase in assets is higher than this. So we are going to have 6,000 plus 20 plus 10 will give us 36,000. Now, 36,000. Now we're going to share the profit. So we have share of profit. And the share of profit. Now in this now, for Taiwo and Kende, if you check in a question there, they said the share profit and loss is what? Equally. The share profit and loss is what? Equally. So it means that for Taiwo, representing with T, it will be, now let's get what would be the profit first. So 36,000 minus, using our calculator, 36,000 minus 920 minus 880 will give us 34,200. So 34,200 is a profit that will be shared. But they said equally. So it will be 1 over 2 times 34,200 over 1. And this is also 1 over 2 times 34,200 over 1. So that if we add half of 34,200 will give us 17,100 naira. And this same thing as 17,100 naira. So that when we add together, we have the same as 36,000. Okay, so that's the revaluation account. That's a profit. Okay, now the next thing they asked us to prepare from the question, they said the goodwill account. The goodwill account. So we have here the goodwill. So since they are asking us to prepare the goodwill account, it means we have to take into cognizance the amount for goodwill. Now, if you check in a question, they have the book value for goodwill in the balance sheet. It is there. The good value for goodwill is 12,000. So remember, goodwill is an asset, an intangible asset, and all assets have a debit balance. So it will be on the debit side as balance brought forward 12,000. Okay, brought for 12,000. Now remember, goodwill was revalued. The increase in assets 6,000. So the corresponding entry will come here as revaluation 6,000. Okay, 6,000. So that's a goodwill for now. Well, still, because they said goodwill is no longer to be retained, but we'll still come back to that. The next one, they said the partner's capital account. Okay, so if we open the partner's capital account, the partner's capital account. Okay, for partner's capital account now, we represent the name Taiwo, Kehinde, Ido, Taiwo, Kehinde, and Ido. Okay, now the partner's capital account. Now, if you check there, they have a balance from the balance sheet that was given. So we have a balance brought forward. For Taiwo, it is 36,000. For Kende, it is also 36,000. Idowu have no capital as at that time. Okay, if you also check there, they said Idowu brought introduced capital of 36,000, which is cash in which he brought. Okay, so we have cash that was brought by Idowu, 36,000. Okay, we have treated capital account before. Please check in the previous video. So 36,000. Now the next one is the share of profit. The share of profit. And the share of profit for Taiwo it is 17,1. For Kehinde it is 17,1. So Idowu had nothing. Okay, so that is for the share of profit. So we are going to add this. Now, if you check in the question, they said goodwill is no longer to be retained in the books. Goodwill is no longer to be retained in the books. Now, we have established that when goodwill is no longer to be retained in the books, what should be done? Now, what should be done is debit the partner's capital account with their new profit or loss sharing ratio and credit the goodwill account. That is when you want to write it off. We have done it before. Please refer to the former video. If you can't find it, ask me the King's tutorial where the former video where you treated this, and I'll drop it for you. Very important. Okay, so if let's check their new ratio. So they said profit and loss would still be shared equally. That's the new ratio. Okay, that means they are sharing it what they are sharing new equally for the new ratio. Now, for this now, the goodwill that was revalued was 18,000. Okay, that was revalued was 18,000. Now sharing it equally. Now, if we do that now, for Kehinde, for Taiwo and Idowu, so it will be 1/3 times 18,000. 18,000 is a goodwill that was revalued. So this will give us 6,000. The same thing as the 6,000, 6,000 for the 3. Okay, because it is equally. So we'll come here and debit it. Goodwill written off. For Taiwo, 6,000. For Kehinde, 6,000. For Idowu, 6,000. And we'll come to the goodwill account. That's why I said we're not yet done. We'll come here for Taiwo. We'll come here for Taiwo, 6,000. For Kehinde, 6,000. For Idowu, 6,000. So if you add everything together, it gives us 18,000. So if you add here too, it is 18,000, and this is 18,000. So it has closed and it is written off. Okay, it is written off. So here now, let's not get the share of profit. Now, if I add 36,000 to 17,1, it will give me 53,100. This will give me 53,100, and this will give me 36,000. Okay, now to get the balance carried down, now 53,100 minus 6,000, it will give me 47,100. 53,100 minus 6,000 will give us the same thing, 47,100. Why 36,000 minus 6,000 will give us 30,000. Okay, so if you add up this is giving us 53,100. This is 53,100, and this is 36,000. Okay, so that's the capital account. So we'll come to the current account, because it asks us to prepare the current account. So if we do that, so the current accounts there, we have the balance brought forward from the question for Taiwo Kende do. For Taiwo, from the question there, it is 2-4. For Kende, it is 1-4, and Idowu had nothing. Okay, so for the balance carried down, for Taiwo, it is 2-4. For Kende, it is 1-4, and Idowu had nothing. Okay, so that is, so we can close this account here. So that's for current account. So these are the accounts they're asking us to prepare. Okay, so the last one quickly is, though it was not asking a question, but in order to ensure that we are correct with what we are doing, is to prepare the balance sheet. Okay, to prepare the balance sheet to ensure that we know what we are doing, and to prepare the balance sheet as the balance sheet after revaluation. So we'll have here the balance sheet. If it balances, then it means we know what we are doing. But if it does not, it means we have to check back. Now, in the balance sheet now, we are going to post in the items here the revalued assets. Those that was revalued, we post the revalued amount. Okay. Now, for freehold, the revalued amount there is 30,000. Okay. The next one, for motor vehicle, the valued amount there is what? 50,000. The next one, for furniture, the valued amount there is what? 6,000. Okay, furniture was not revalued. It is 6,000 from the book value. It is just the freehold and the motor vehicle. Okay, so that's for fixed asset. Now for current asset, if you check there, we have stock. Stock was revalued, so it is the valued amount we put. Stock is 12,000. Okay, the next one is debtors. We have debtors as 18.4. Now remember this provision 920. We have less provision 920. So 18.4 minus 920, using my calculator, will give me 17,480. Okay. The next one, we have bank there. Bank is 3,360. All right. Yes. And also we have cash. Now the cash here comprise of watch the book value 1,000 plus the one that was brought by Do used as capital, 36,000. So 1,000 plus 36,000 gives us 37,000. So that is for the assets. Now for the left hand side is our capital. The capital for Taiwo, Kende, and Idowu. Now we'll come to the capital account, and for Taiwo is 47,100, for Kende 47,100, and for Idowu it is 30,000. So if we add these three, it will give us from our calculator 124,200. That's the capital. I'll also come to the current account. The current accounts for just Taiwo and Kende. So Taiwo is 2,400, Kende is 1,400. So 2,400 plus 1,4 will give us 3,800. So that's for the current account. Now our current liability, it was not revalued, so we'll just write the book value there. And the first one there is the creditors. And the creditors there is what? 20,000. Okay. The next one there is what? The bills payable. The bills payable there is how much? 7,000. While the other one there is what? Accruals, which is what? 840. So if we add these two together, everything, the left hand side will give us 155,840, and also the right hand side will give us 155,840. So it balanced automatically. So this is how to prepare the revaluation account using this method. Now, like I told you, the balance sheet is after revaluation. This is how it will appear. Okay, so that's how to prepare. So ensure you like, comment, share, and subscribe to this channel. Now, we are going to see other aspect of the revaluation account. This is one aspect of the question. It also have different aspect. Okay, so ensure you like. Please ensure you watch the previous one we've done. Okay, thank you very much.